are public knowledge. So if that existed, we said in Pakistan there is a need to create a balance whereby there can be chief executives thinking at the board level which can be challenged. Having come to that view, we took a look at recent practices in Pakistan, and we found instances where the chief executive had been with organizations for almost 20 years, 30 years. So effectively the boards of those companies had become, in a sense, a non-challenging board. Whatever the chief executive said would essentially be implemented or accepted by all, as long as the majority shareholder agreed with the thinking of the chief executive. So there was no challenging that was taking place. So we said there is a need for someone to be on the board from the executive who would keep that balance between the chief executive and what actually was happening in the management. So that was one part of it. The other part was that non-executive directors, the majority of the listed companies, particularly the family-owned businesses, the boards were being flooded by including family members as non-executive directors. And we had a recent scandal in Pakistan, which was the case known to most of you of Colmate, where the members of the audit committee were dominantly executive and family members. And the issue was about the selection of an accounting policy for recognition of revenue from the sale of prepaid phone cards. And the earlier policy, which was that once the card has been activated, then the revenue would be recognized. That policy got changed by the management to recognizing revenue the moment the cards were issued. This was done at a time when at the time of the quarterly accounts. So there was no real challenge of accounting policy until the half year on 31 December. And in the limited review in the half year, the auditors, the external auditors, they challenged the accounting policy and disagreed with it. By that time, the share price has started going up substantially, and there were issues which happened, which I think is public knowledge, and at the end of it, it just turned pretty bad. The share price started going down. There were allegations of the majority shareholder having sold off their shares, and it was just bad news. So in the backdrop of seeing that the majority of the listed companies had family members as non-executives, we said there needs to be a balance of skills that is available to the board. And how do you get those skills now? Not every family member will have that skill. So what does one do? And the way that we identified was to try and say that the board should bring on individuals with the necessary skills who have got no other interest in the organization other than the fact that they are representing on the board of directors. So the definition of the independent director was left as it was, but very detailed explanation was given as to what situations would lead to the person not being considered as an independent director. Earlier, the State Bank of Pakistan had also very detailed explanations on this. So we had an existing example to work with, and so the explanation to who cannot be an independent director, that got developed. And in working out a healthy balance, the recommendation that came out from the task force was that at least 1/3 of the board should be of independent directors, where a certain level of skill mix was available. At the round table, this was hotly debated, and the compromise situation that finally got settled by Security Exchange was only one person should be an independent director. So the mandatory requirement is only one. So if there is a board of 7, you have one person as an independent director, you've got 4 others as non-executives, and you have 2 as executive directors. The chief executive plus 1 more. That's in a board of 7. So the requirement is that there should be a mix of executive and non-executive directors, that the executive directors should not exceed 2, and that the independent director should be at least 1, preferably 1/3. That is the requirement at the moment. On the audit committee, earlier there were only executives. Now the independent director should be at least 1 person. All the members should be non-executives, but one of them should be an independent, and the chairman should be an independent director. This is just to strengthen the audit committee and to avoid the happenings that took place in Colmate. On the HR and Remuneration Committee, earlier you could have only executives. Now they have to be non-executive directors, and the executive director, which is the chief executive, can be invited as a member. Role of the company secretary. The company secretary had been relegated to effectively a person who was recording share transfers and maintaining the register of shares. With changes in technology and the shares being carried digitally, and with CDC coming in as a custodian, the company secretary's role, which had always been a very important role, hopefully is now going to take on effectively the role of the champion for corporate governance in any organization. So earlier the appointment and removal of the company secretary could be done by the chief executive. The board of directors would admit at the time of entry and at the time of exit. However, under the 12th code, it is now the board which has to be involved in the appointment and removal of the company secretary. The qualifications have continued as they were and as are given in the company law and the rules. The head of internal audit, now the appointment as well as removal has to be done with the approval of the board, and definitive qualifications have been given for the head of internal audit. There is a clarification that I should give over here. There is a requirement of 5 years experience, and Security Exchange have confirmed that the 5 years experience can also be gained as audit service. It is not necessarily 5 years post-qualifying experience. Role of the CFO. Again, the board has been involved in both the appointment and the removal, and the qualifications of the CFO are pretty much the same as existed. The only thing that has come about is that there is a requirement of 5 years experience, and again the Security Exchange has given dispensation